Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mark Marex, Senior Specialist with Index Research and Development with Nasdaq Investment Intelligence, to discuss the Nasdaq US Smart Retail Index and the types of consumer and retail companies that it tracks. Mark, it's great to see you as always. Welcome back to Trade Talks.
Thanks, Jill. Great to be back as always.
All right, Mark, clearly an index that we're focused on this time of year as we go through Black Friday, Cyber Monday, and the crux of the holiday season. Tell us about this particular index.
Sure. So the ticker for this one is NQSSRE. There's a tracking product on this that was launched by First Trust. Ticker is FTXD. And it's got a pretty interesting methodology here. What it does is it looks at 12 different subsectors that relate to retail, specifically in the US, and basically ranks all those companies in terms of their liquidity. So we're selecting the 50 most liquid companies within that US retail universe as defined by 3-month average daily trading volume. And then, you've got pretty regular kind of annual reconstitutions, quarterly rebalancing. But the really interesting thing about this index is the weighting. And it's really got 3 tiers of weighting according to factor performance. So it looks at volatility on a trailing 1-year basis. It looks at value as defined by cash flow to price. And it looks at growth as defined by 3, 6, 9, and 12-month trailing price returns. And so basically kind of the index methodology looks at all the aggregate scores of these 3 factors across those 50 securities that are selected for the index. And then it calculates the weights according to how those aggregate scores across the 3 factors stack up each security relative to the other. There's some capping introduced there too to prevent over concentration in any one particular constituent, and then also on the bottom end to prevent including constituents that are maybe too small based on those scores. Really, really interesting and relevant index, as you mentioned, because of what's been happening recently with Black Friday and Cyber Monday. Heading into the holiday season, I put up a few headlines there from CNBC. Bit of a disappointment this year. Traffic is still materially down versus 2 years ago, even though consumer spending, generally speaking, this year is strongly recovered. People think a lot of that is just because spending has been pulled forward throughout the year. That's why we didn't see maybe as strong of a surge into Black Friday and Cyber Monday as in previous years. Also, retailers feeling that inflation pinch and not discounting as deeply as they have in past years.
Right. And Mark, it's so interesting when you think about retail, because there are some fine lines when it comes between a retail company and technology companies these days. So tell us about the composition and constituents within the index.
Sure. So what you look at here on the left-hand side, it's only 8 subsectors out of the 12 that came up in this portfolio of 50 names. You can see specialty retailers and diversified retailers are the biggest 2 components there at 38 and 28% of the index weight, respectively. That includes a lot of names like, the department stores like Macy's. You've got Walmart in there too. A lot of different specialty and then also department stores make up this index. You've got a slice also there from drug retailers in purple there at almost 9%. And then also home improvement and apparel represented there at around 7 to 8% each too. On the right-hand side, you see what the market cap, picture looks like in terms of these in these companies. 100 billion plus, only about a quarter of the index, and then more than half of the index weight coming from that purple 10 to 50 billion section. So sort of your bigger mid caps and your smaller large caps representing the biggest chunk of index weight in this space. If we go to the next slide, I've picked out and highlighted sort of, the top 15 constituents by weight as of today in this index, really starting with GameStop, right? GameStop, because of how much it has grown over the last year in terms of its price performance, hard to imagine, but that huge, GameStop pop that happened was actually in 2021. It was back in January. That has powered that constituent up to be, the biggest holding in the index. CVS Health there at number 2, AutoZone there at number 3, Kroger is a grocer, number 4, Walmart number 5. So you can see it's a nice mix of, again, what we were talking about, those diversified plus specialty retailers. You look at the right-hand side of this chart and the performance of some of these. I mean, GameStop is just off the charts, over 800% up year to date after a really strong 2020. And then the rest of these, for the most part, you'll notice performance this year really picking up versus last year. Walmart, one of the few names that actually is down year over year in terms of performance and weaker than 2020. But most of the rest of these, check out Macy's at the end there, up over 100% after a very, very difficult 2020, given all the stuff that happened with COVID.
Right, right. And Mark, to wrap up here, how about the retail index performance versus benchmark?
Yeah, so what I've plotted out here in the blue is this index, NQSSRE, up about 27% year to date as of this morning. And then the rest there, you've got the Nasdaq 100 following at 23%, the S&P 500 at 22%, and then the S&P Midcap 400 at 19.5%, and then the Russell Midcap Growth at 8.4%. The main takeaway here is that, you know, in terms of outperforming midcaps and midcap growth, retail has been a good space to be. Midcap growth has kind of had a bit of a challenge this year, even though large caps have still done pretty well. And with the Nasdaq 100, large cap growth still doing pretty well. So an interesting way to play that kind of reopening, reflation, cyclical trade that's been going on for most of this year.
All right, Mark, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.